In the past few years, more and more Toronto condo investors have told us they want to shift to houses instead. Yes, the cash flows are better in houses, but there really are better places in Canada for that. The big reason why most of these investors are choosing Toronto is because they see the better growth in Toronto, and that is what contributes to the better performing real estate returns in Toronto compared to the rest of Canada. Honestly, most of these investors don't need the cash flows. They are also able to choose from more options nowadays because they have gained a lot of equity over the past few years. Basically, they're just looking for the investment that can give them the best returns, which leads them to zero in on houses in Toronto. But when we look at houses to invest in, the big question I get asked all the time is, which neighborhoods in Toronto make the best freehold investments? So in this video, let's talk all about appreciation trends, rent yields, and value add differences between neighborhoods in Toronto. Hopefully, this can help you make a more informed real estate investment decision. Before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you see more videos like this made specifically for real estate investors in Toronto. Like what I just mentioned before, what really sets Toronto apart is our impressive appreciation track record. Take a look at this. Ever since 2015 until now, Toronto has seen an amazing 9% average annual appreciation in detached homes. And then I broke it down a little bit more and looked at the average appreciation by neighborhood. And here's some more interesting insights. When I sorted the neighborhoods from highest to lowest appreciation, you end up seeing a mishmash of east and west end neighborhoods with less rhyme or reason at the top of the scale. And then once you scroll down, you'll see that most of these central locations are sitting at the bottom of the appreciation scale. If you've been around Toronto for long enough, you'll know that the areas in the more central locations are definitely better, they are more mature neighborhoods, and they are generally more expensive. Simply because of the price, there could be a good drop in demand. So because of this, it probably makes sense to see slower price growth, and so I decided to plot the price against appreciation to get another perspective. So as you can see in this chart, there's actually not a super clear correlation between price and appreciation. Instead, I would say that there is a price threshold to watch out for. Basically, anything under the $1.6 million mark does see higher average appreciation. Once you go above that point, appreciation drops to a lower average range. Now, besides price, I would say gentrification is also something else to take a look at if you want the highest appreciation. If you end up picking up a property in the earlier stages of gentrification, it might be slightly higher risk in case plans don't pan out, but you would also get a potential for a longer period of better growth. Next, let's take a look at average rents by neighborhood. Once you do this, you'll probably notice that rents don't vary all that much across the city. For example, if you look at one-bedroom apartments, the most expensive ones are in Rosedale, costing an average of $2,600 per month. On the other side of the spectrum, the cheapest one-bedroom apartments are on the West End, hovering around $1,700 per month. So basically, renters pay a 53% premium if they choose to live in Rosedale. But now let's take a look at the premium for real estate prices. A detached home in Rosedale averages around $4.3 million, which is almost fourfold of detached homes on the West End that start at $1.1 million. So the price ends up being a key driver for rent yields, and that's why we do see a very clear correlation between price and rent yields, as you can see in this chart. Now, if you want to improve cap rates, you can choose to invest in a multiplex instead of a home with a secondary suite. Basically, once you have more units, your rent yields do improve. And so you can see here that a triplex in the same starter neighborhood gets a jump in rent yields compared to a 2-unit house in the same starter neighborhood. Another question I get asked often is, do cash flows matter? Normally, as long as you have break-even cash flows on a house, I'd say it's normally fine and you can look at total returns to steer your decisions. But we are in an exceptional time right now where we are expecting very aggressive rate hikes, possibly for the next few months. So in this case, as a safety net, you might want to choose properties that have better cash flows to make your investment safer from a risk standpoint. The last thing I wanted to touch on are value add returns. All houses in Toronto are allowed to build secondary suites, and we also have garden suites coming soon. So I'd say there's less of a difference between neighborhoods on this front. Perhaps the biggest value add difference right now is zoning, and this is what sets apart different neighborhoods. The R zone is the most permissive, and you can really build anything from apartment buildings to multiplexes to townhouses, semis, and detached homes. The least permissive zone is the RD zone, where you are only allowed to build detached homes. So if you are planning on taking on a multiplex conversion to bump up your rent yields and appreciation, then you'd have to look into zoning too. For example, Scarborough might see the best returns, but zoning isn't very permissive, which means you aren't allowed multiplex conversions. So it might make more sense for you to invest in Riverdale, for example, where total returns are only 2% less annually, but you'd be able to benefit much more from the conversion. To sum it all up, real estate investing is not a one-size-fits-all answer, even if we're looking at Toronto freeholds specifically. There's also other factors that I didn't talk about yet. For example, if you're thinking about retiring, you might want to focus more on rental income and cash flows. Or if you are in an earlier stage in life, you'd probably want to prioritize appreciation so that you can push gains and taxes further down the road. If you are confused but you want to invest in Toronto real estate, don't worry, because our team can help you out. We can look at your requirements and preferences and then match you up with the best investment property that fits your needs. After we help you buy it, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.